The BRIC nations, when done within 3 to 5 years tops, will have more impact or at least equal to world trade than the Industrial Revolution did. I think the BRIC situation, just to close on that, is probably the most under talked about but biggest potential changer to a wide variety of investments over the next second half of this year. We've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that, clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50.
In 2006, Brazil, Russia, India, and China created the BRIC group. South Africa joined in 2010, making it BRICS. The group was designed to bring together the world's most important developing countries to challenge the political and economic power of the wealthier nations of North America and Western Europe. Last year, BRICS, an acronym that was originally used to refer to Brazil, Russia, India, China, and South Africa, decided to expand its membership, inviting Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates to join the bloc. The name for the expanded group has not yet been officially announced, but it could be called BRICS Plus. Peter Grandich, author and former head of investment strategy for a leading New York Stock Exchange firm, opened with an overview of BRICS and the changing global order. He notes that we have already seen the first signs of this significant shift in the second half of this year. Combined with its members, BRICS account for about 45% of the world's population, around 3.5 billion people. Their economies are worth around $30 trillion, about 28% of the global economy, according to World Bank data. After tossing around a few bad ideas, the BRICS countries have settled on using gold as the basis for international exchange, a role previously taken by dollars and euros. Peter Grandich argues that this movement in gold was not for trade or speculation, but because people believed an alternative financial system was necessary. He suggests that trusting paper money will become futile as the situation in the United States deteriorates, and the BRICS nations will be pivotal in this shift. The World Gold Council reported that BRICS has been the largest buyer of gold since 2022 and is accumulating tons worth of the precious metal in the reserves. As of Q1 2024, the combined central bank gold holdings of the original BRICS nations, plus the 5 new additions, accounted for nearly 17% of all the gold held in the world central banks. Russia, India, and China rank in the top 10 for central bank gold holdings. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
I'm a big believer in the BRICS. I believe, in fact, let me take a step back and so I believe there's 5 key factors for Americans. As Americans, I can't speak for Europeans, but as Americans, they should build what I call a financial arc. That's what I started stating in March. One we all know about, we can talk about till the cows come home, the debt and deficits. We're going to get to a point soon where we're going to have a problem paying just the interest. Second, in America, we have a huge retirement and aging crisis. Third, and it's around the world, you got it too, we have an immigration invasion. And there are economic consequences that people don't understand. I'm going to skip to the 5th one. We also have here in America political paralysis. We have 2 parties that can no longer work together, be in the same room, and each has a splintering within their group moving in the opposite direction of the main middle ground. But the 4th reason I've told people, and I've said it's the most overlooked economic decision that Wall Street has messed up on, probably in modern times, will be the misunderstanding and not appreciating what is happening with the BRIC nations. It is unbelievable to talk. I gave a talk recently to some young advisors, and I said to them, let me ask you something. Even if it only ends up 20 or 30 countries, that's 20 or 30 countries that used to deal with the United States in a big way and now won't be. How's that beneficial to the United States? How does the BRICS benefit the United States? It doesn't. It is so negative. And again, you being ahead of the time like you were about the manipulation. I absolutely agree with you. I don't have the contacts you have, but it's important when people like you talk about it because I know you do. There's no question that this big movement in gold that occurred, in my mind, Andy, and I know I'm singing to the choir, but even if I was being on national TV, I'd say the same thing right now, happened not for a trade, not for speculation, but because people believe an alternative is going to be necessary, even on just on a regional basis to start, and eventually, because people are just going to see that trusting paper is a lost cause when everything goes to hell in a handbasket in the United States. And where's it going to be used? It's going to be used by the groups in the BRICS. Now, how they exactly use it, that's your area of expertise. And I always bow to people that I know that are smarter than me, and you are. But I'll just tell you this, you're absolutely right. And I think it's going to be a shock to people. And most people on Wall Street can barely spell BRICS. They have no concept of what has been transpiring, how they've already been, like you said, testing trading, forming associations. Look, again, here in our media, no one made anything about how the Saudis has just said, you know what? I think we're basically done just with dollars. I think we're willing to sell to whoever we want. And by the way, we're also interested in joining the BRICS as well. You can toss most financial advisors off the top of the Empire State Building and all the way down, they'll all say the same thing. Hey, so far, so good. Wall Street has this horrific habit of always seeing the cup half full. It doesn't pay to see it half empty. That was my claim to fame when I was a young guy, 3 years in the business, forecast a crash. They told me you can't say it, you got to resign. The crash came the next day. I said everything's going to be hunky-dory, et cetera, et cetera. And that's how the so-called whiz kid was born. But they do not want to talk about the negatives because negatives don't sell.
Throughout 2023 and early 2024, gold prices saw significant gains as investors sought safe haven assets amidst global economic uncertainty and inflation concerns. On the other hand, silver emerges once more in the spotlight. The silver market has had a strong week again, as the market continues to find a lot of buyers on each dip. At this point, it looks like we are going to try to reach the $32 level above. Peter Grandich emphasizes, I believe gold and silver belong on the same level now. I think we're halfway through this move, with another half to go. The next big push will come when the news breaks about what the BRICS are doing with gold, driving prices well above $2,500 towards $3,000, and silver to $35 or $40, heading towards $50. Let's now turn our attention to the video again.
I always say silver was the kissing cousin to gold, and that I would always own more gold than I would own silver. But what I've said of late to people is the fundamental argument for silver has changed dramatically for the better. There is so much more industrial usage for it, and the known supply and demand scenario has turned extremely bullish for it. So I believe you should be equal weight in it. But let me also point this to you. If you went out and polled 100 American financial advisors now in any part of our country and said, since the new millennium started, what has performed better? Stocks, bonds, and gold. They'd all say stocks. They'll say bonds second and then gold. And then when you show them that gold has outperformed even the stock market for almost 25 years, they scratch their head and go, I didn't know that. And yet so few people have that exposure to it. So I think an equal breakdown in it is worthy of it. I do think that there tends to be a tendency among individual investors to take quantity over so-called quality, in a sense that they like to have 10,000 shares of a dollar stock versus 1,000 shares of a $10 stock, even though it's the same amount of money. But I really believe gold and silver belong on the same level now. And both, I think, my feeling on this is we've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that, clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50. And so I'm getting past the next few days or a few weeks until we have this fall meeting. Yeah, we could, flounder either side of a couple of dollars on silver and $100 or so on gold, but they still have substantial upside potential. And again, the worst case scenario is to buy it and hope it doesn't go up, because most people steal assets are based in financial assets, not hard assets. One of the sayings a lot of us that were involved with shares 10, 20, 30 years ago used to say can no longer be said at a gold show. We used to say owning mining shares is just like owning gold. while gold rose steadily from 12, 1300 to 1600 to 2000, all the way most recently to the highs. Lower you went in the food chain down to the more riskier exploration, the bigger the losses were. It's still unfathomable for me, somebody that's been doing this for 40 plus years, to somebody who would have said to me, if you would have sent me back at the 2011 London, hey, Pete, I was in the future. 2024, gold's 24.50, silver's around 30, copper's above $4. I would say, man, my mining shares, I must have made a killing. Well, the only person that's been killed so far is my portfolio.
At the beginning of this month, Turkey's interest in joining BRICS garnered significant global attention. Turkish Foreign Minister Hakan Fidan, during his visit to China, made the announcement, "We would like to become a member of BRICS. Let's see what we can achieve this year." Economically, BRICS accounts for 36.7% of global GDP based on purchasing power parity, surpassing the G7's 29.6%. The interest in joining BRICS is widespread, with nearly 30 countries expressing a desire to become members or gain partner status. This growing appeal highlights the association's importance on the global stage. What is your stance? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.